Forex market situation update. Good morning, everybody. Welcome back to USD Today. I think you're gonna love what I've prepared for you today, guys. It's no other than the euro dollar, which we decided to take action to jump in. We established a bullish position, but here's where it becomes interesting, because we could go in on two different paths. We could have shoot for the stars, not only because we can, but because we have a solid target that is a Fibonacci projection analysis, solid level at 30.75. We think price is heading toward that area, right? So we could have taken that path, a long-term type of trading opportunity that we're definitely identifying here, but we decided to go on a different path, more locally. Right, we decided instead of shooting for the stars, we're gonna try to take that. We're gonna try to break that move into smaller steps, and we're gonna try to climb up that ladder in smaller steps. Right, so you can see this. You see this line here, this dotted red line. This is the target. This is the take profit order that we've already placed here. So you see, we're taking this locally, right? But here's the thing. We know there was a big level, our main point of reference, 21.05, which we've been watching very closely in the past couple of months. And after price 2 months ago, it broke that level, right, with a monthly closeout confirmation. It closed the monthly bar above 21.05, and then it came back the following month, which was last month. It came back to check up on that level, found that necessary support, spiked that level, remained above. But this month was off the charts, because this month was drilling through that level, and it went as low as 1950, right? 55 pip, just to do the same, just to spike, right? Basically to turn back up before the end of the month and bounce back up, leaving a deeper spike, but still showing how much respect it gives that 21.05 as a new support level, right? So that's everything we needed to see, right? We literally didn't need to see anything beyond that. That was just perfect as it is, because we see a huge amount of potential, a huge amount of support coming from 21.05, which means price is going to continue to shoot, upwards. So the only thing that was left to do was to decide on the strategy, right? So like I said, we're taking this locally. I want to dive right into it. All right, let me show you what's going on in the shorter time frame. So for example, from the weekly perspective, right, there was clearly not a lot of respect to that 21.05, not even close to what we've seen on the monthly. So price did slice that level back and forth, but take a look what happened a couple of weeks ago when it landed back above, and then last week spiking it from above, right, leaving a huge spike, suggesting that it starts to pay attention here. And this week it's already pushing itself against off that level, literally, right? Spiked it slightly, and now it's pushing itself against that level. From a daily perspective, it's also very interesting, because now I'm going to show you why we decided to place our primary target, our only target actually, at 23.43. Right? It may look like as if we've placed it here just because it represents the previous high, but that would be, that's not the case. All right, it just happens to be that right there at the previous high, which is great for us because it serves two purposes now. But the real reason we've placed it here was a simple Fibonacci projection 161.8. All right, the most important one, I would say, right? 161.8 off, well, here it is, off wave C. All right, because we had here a classic ABC correction, and we think that correction is over, and that's why price is back on the upside, back to the original upside trend, right? We had a bit of a technical correction, ABC, where wave A is roughly equal wave C, by the way. Now, wave C represents the previous opposite move, the most significant one. So we had to choose this wave and perform the analysis on that move from top to bottom, 161.8 to right there where the previous high is. Coincidence? I don't know. In any case, there's massive resistance here at 23.43, and you know how these massive resistance work. Usually they draw price to them and then they push against price action, they push against that and serve their purpose as resistance. So we're aiming at 23.40, which means that we took about 200 pip from the get-go, a little bit over 200 pip actually. As you can see, a couple of days ago we pulled the trigger and price seems to be heading in the right direction. So far so good, so to speak. We got our stop loss level at 120, and we'll definitely continue to follow up very closely on this bullish campaign. That's about that euro dollar. We'll be back with the next one, so stay tuned.